Good morning. It's 6 a.m. and welcome to the pre-market analysis for Tuesday, March 17th. क्योंकि हर एग्जाम से पहले रिविजन जरूरी होता है, वैसे ही हर मार्केट से पहले प्री मार्केट इज ऑल्सो वेरी इंपॉर्टेंट. Yesterday, the Indian market went to the Patal Lok, and after the few hours, it came back from Patal Lok. I'm Sankalp, and we are about to break down why today's 160-point gap up might be the ultimate short squeeze or the ultimate trap for those who believe dead cat has come back to life. Hit that like button, subscribe, and stay ahead of the curve. Let's get into the deep dive. Before we look at today's open, we have to address the miracle recovery of yesterday. Nifty plunged nearly 300 points early on, slicing through the 23,000 psychological floor to hit a terrifying intraday low of 22,955. Okay? सबको लगा कि बस और भी और नीचे जाएगा. लेकिन from those lows, we saw a vertical 450-point recovery to close at 23,408. So many of us believe that it's a dead cat bounce. Why? Because Nifty, despite being 1.1% up, the market breadth was actually weak. Only a few heavyweights like HDFC Bank and UltraTech were doing the heavy lifting, while over 3,000 stocks across NSE were still bleeding red. If this cat was truly dead, today's gap up is where the bears will start selling again. And we need to see the volume follow through today to prove this recovery is real. Otherwise, it's a bearish zone. Right? But obviously, nothing can happen on Nifty without actually examining why and what were the global markets doing. The reason that we were up so early. Global markets rebound as US tech surges and oil panic eases. The global backdrop has finally given us some breathing room. Brent Crude has retreated from its $106 to is currently trading at 100.88. That is a big relief for all of us. The immediate supply shock panic has eased and several Indian LPG tankers, including the Shivalik, successfully transited the Strait of Hormuz. So we have at least 2 more days of gas. President Trump has been vocal, demanding an international naval escort mission to police the Strait of Hormuz. However, the overnight news is that Japan and Australia have officially rebuffed the request, citing constitutional and diplomatic risks. Europe remains non-committal. This snub is actually a stabilizer. It tells the market that a full-scale naval escalation is not happening just yet. Consequently, GIFT Nifty is flashing a massive 23,568, signaling a 160-point gap at 9:15 a.m. So please expect a good gap up, right? That's how new GIFT Nifty works. But before we move, let's explore yesterday's domestic depth index. DIIs are the hero for last 1 year. So DIIs rescued the floor as FIs continued their massive exit. The internal data shows that the war of attrition between the domestic and foreign money. FIs remained aggressive sellers, dumping around 10,700 crores yesterday. However, our DIIs, the heroes, you and I, countered that with a massive 12,500 crore plus buy-in. This is literally the Indian retail versus the world right now. Let's identify 3 momentum stocks from yesterday. The PSU star for the day was up 18.7%, which is ITI Ltd. This is where the speculative volume is sitting. Okay. MRPL was up 15.7%. It's become the go-to high beta player for anyone betting on an oil price stabilization. And lastly, UltraTech Cement was up 4.5%. This is your safety stock. If it holds, the Nifty will hold. India's VIX or volatility has cooled slightly to 21.6. It's down, but remember, as long as we are above 20, a 100-point Nifty move can happen in 10 minutes. So stay alert. In fact, I say that as a rule, do not trade when the volatility is above 20. It's a bad situation. It's almost like a gamble on a gamble. But this evaluation is not complete until we talk about today. And today is not just about levels, it's about the short squeeze. Thousands of traders went short on Friday and Monday morning, expecting a crash to 22,000. But with a 160-point gap up today, those traders are in a max pain zone. If Nifty opens and stays above 23,550 for the first 30 minutes, those short sellers will be forced to buy back their positions to stop the bleeding. Now that is a mathematical certainty. Obviously, it is nearing the stop loss or passing it, so people try to stay disciplined. That forced buying is going to be your fuel. it could catapult us towards 23,750 very, very quickly. However, watch the 23,620 mark. If there is a gap down resistance from last week, if we hit that and see a sharp rejection, the dead cat is confirmed and we head back to 23,300. So the levels to watch are support at 23,380, which is yesterday's value zone, and resistance is at 23,650. Bank Nifty must hold 54,400 to sustain the rally. Okay, so what's the final verdict? आज के दिन में क्या करना है ये ध्यान से सुन लो. तो आज के दिन में क्या करना है ये ध्यान से सुन लो. Don't get blinded by the green screen at 9:15 a.m. Let the first 15-minute candle close and tell its story. If we hold 23,500, the squeeze is on. If we fail, the sellers are still in control. Remember that we are still a bearish market. Global situation has improved, but it has not changed. So if the fundamentals don't change, the market position will not really change. Stick to the plan, and most importantly, protect your capital. And let's win this morning session. So thank you for tuning in so early in the morning. We are up here since 4 a.m. trying to give you a full detailed analysis of what could happen today. Okay, and we are also starting this series where we premiere this particular program at 6 a.m. in the morning. So make it a habit. Instead of doing all the paper ka headline, you could possibly give us a quick glance for 4 to 5 minutes. So thanks again for tuning in. Have a great day, a lovely morning, and make sure that you like and subscribe. So bye-bye.